Morning is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 24 minutes to go until the start of trading, and we have all the markets in positive territory. Big day for Chairman Powell. He will be speaking at 10 o'clock. We have a few Fed speakers out there already. We get the market in positive territory. A little bit of negative action in the S&Ps right out of the gate yesterday. We start the trading day yesterday at about 44.90. You make it down. I mean, we're talking about quite a range here. Almost, you're talking about 30 points to about 44.62. You close out the day basically above 44.65, and in the overnight session, you were as high as almost 44.85. We're trading 44.77. We have some earnings out today, a little bit of volatility across the board. Peloton out with their numbers. They're going to be coming out with a cheaper bike at some point. That's going to hit their revenue. They miss on revenue, a little bit of a miss on guidance. They are trading lower this morning. The Dow up 71 points, 35,231. Now you had Salesforce, and we have some Salesforce in my newsletter. Quite the give back yesterday. They were putting more points than they ended with. Still finished yesterday's session up about $5, but you gave back about $7.50 from the high of 275 yesterday. This morning with the market, they're a little bit higher. The Dow company, the Russell, up about 4 points right now at 22.18. Crude catching a bid this morning. We just made it above $69. We're trading at 68.82. Gold contract, a little bit of volatility as well. Check out gold, up to almost 1808, down to 1794. Even in the last half hour, even the last few minutes, from 1803 to 1797. Gold could see some action this morning with Chairman Powell out there at 10 a.m. Eastern time in Jackson Hole. And we jump to notes and bonds. Most importantly, on a Fed speak day, there's a little bit of volatility for you. When you take a look at where we are right now in the 10-year, you're talking about 1.33% in the 10-year, trading at 133.02 right now. Over in Asia, you got the Nikkei down 0.3%. Over in Europe right now, a little bit of negative action. DAX down about 1/10. FTSE down 0.1%. CAC roll down 0.2%. All right, let's kick things off. It is Fed Day, but we're going to kick it off with a little earnings action. Peloton out with their numbers. Talk about some volatility to the downside and almost all the way back. Peloton closes out yesterday's session at about 114. You trade down to you trade down to 97. All right, you're talking about a move of $17. You're talking about almost a 15% drop immediately in that overnight move in terms of right after the closing bell. 5 o'clock, the conference call begins Eastern time. Pretty tame action this morning, though, since about 6:30. You got Peloton up $10. I mean, you're talking about a 9% move basically in the last 2.5 hours coming into the opening bell. Getting into what the Peloton earnings had to say, well, that's them getting subpoenaed. I'm going to get into the numbers first. Shares fall after Cycle Maker posts disappointing earnings and outlook and cuts the bike price. I talked about it on my show yesterday. I think I was talking to Kevin Hincks saying, man, it is intense selling a bike for, what is it, $2,000, $2,200, something like that. And they do have a variety of options now. As somebody that likes being active, folks, I'm fortunate to live in Florida where it's a little bit hellish with the temperatures this time of year, late August, but we have the ability to be outside, actually biking outside. If I was in my hometown, beautiful Boston, or maybe that windy city, Chicago, I might be more interested in the stationary bike inside when you can't get outside during those winter months. But $2,200 just for the privilege to then pay a recurring monthly fee to be able to use that bike in the way that maximizes its value always seemed a little bit tough for me to stomach in the future. But not during a COVID pandemic where the world shuts down, gyms shut down. I have not been to a gym, and I'm talking about, what are we pushing, folks? We're pushing February or March of 2020. Thankfully, I've been able to get outside, stay active, just take a walk if you have to, folks. Stay active. Peloton, though, you see the action here. Now, getting into the actual numbers, loss per share, $1.05 versus 45 cents. Revenue, a slight beat there. Now, where they come in, total revenue grew 54% to $936 million. They face stiff competition from other at-home businesses. Shouldn't be surprising. You see the commercials, I'm sure. Tonal, right? What's the one with the mirror on the wall, etc.? Didn't Lululemon bought one? Did they buy Tonal? No, Mirror. Yeah, Lululemon owns the Mirror. There's Tonal out there that I see a bunch of ads for as well, along with Nordic Track, all of those, the usual suspects. Digital subscriptions, which don't require equipment, up 176% to 874,000. That is quite a number. And when they look at the churn, 0.73% from 0.52%, still under 1%. Quite a number when you're approaching 1 million subscriptions. It had hit a 6-year low of 0.31%. Makes sense that's going to go up as the world opens back up, folks. In terms of what they're looking at, getting into the numbers, yeah. They see 5.4 billion and connected fitness subscribers growing to 3.63 million total. Quite a number there in a big way. So the market actually clawing back a lot of those losses. Interesting to see on Peloton. You dive from 114 down to 97. Now, this thing in context here, take a look at where we are. You made it down to 97, not quite to that 382. The original low that we had in terms of the pullback in May, you make it down to 81. We just traded down to the high of that low, right? About 97 bucks on that spike. You catch a little bit of a bounce. Interesting to see where we go from there. You're still looking at all-time highs in Peloton of 171. Even back to 110, you're talking about prices from last September, early October in Peloton. All right, jumping down the line, what else we got going on? So we'll talk about a little bit of the Fed. So you have Fed Powell, George, to open Jackson Hole Symposium and your agenda in terms of where you go. 10 o'clock, Kansas City Fed Esther George opens the symposium with an introduction, and Federal Reserve Jerome Powell gives the opening remarks. That's happening at 10 o'clock, about 48 minutes to go from right now. 10:30, discussion on a paper on monetary policy and uneven shocks, whose authors include Veronica Guerrero, not familiar. So it looks like 10 o'clock is going to be action at 10:30. You're going to have another discussion on here going on 11:15. You got the interaction of fiscal and monetary policy. They have a whole lineup here, which would make sense, right? Going throughout the day. So you will get some headlines. None going to be more important, though, than what comes out at 10 o'clock with Chairman Powell. And he's going to be introduced by Esther George. That happening at 10 a.m. Eastern time this morning, 30 minutes into the trading day. All right, jumping around to what else we got going on. How about Bitcoin? Up above 50,000, giving back some of the small gains right now. That is about a 50% retracement of the low to the high in terms of 65,000. But, man, you want to talk about, just back this thing up on a 5-year daily for 1 second. Let's take off this Fibonacci number just to make it a little bit clearer. And you're talking about a move that really began December 11th at 18,000. You trade up to 65,000. You back up to 29, and just like that, we're up $17,000 on a $29,000 instrument, we'll call it. But as I talked about, you take a look at this and keep your eye on one of these retracements, because as you come down to this low, the 618 only sitting at about 51,007. Now, what's interesting there is you had a consolidation going back in May. If you're going to run into a little bit of resistance, right, you see the one-way move this thing had. Basically, May 12th at 58,000 down to, and that was the huge volume day, the first time really fear set into that Bitcoin market. May 19th, so 1 week, you go from 58,000 to 30,000. It would make sense that you rise up to that level. We've now reached somewhat near the bottom of that range that we were in from late April to the demise in early May on Bitcoin. All right, folks, stay tuned. We're going to come back after the break. Check out that trend line in the S&P. Now, here's what I have going on here. We'll talk about this when we get back. You just got to keep it on your radar. Oh, I didn't want to do that. Control Z. Control Z is the undo on the Thinkorswim platform. Always something that makes life a little easier. We're going to cancel that left extension. We're going to cancel that right extension, zoom it in, and we'll go over this S&P channel when we get right back, folks. Stay tuned.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps positive by 9 right now. We get the NASDAQ positive by 34, Dow positive 65, Russell positive by 5. All the markets in positive territory. I got a chart of the S&P futures up here. We're positive by 9 points. We're within about 23 points right now of all-time highs made a couple days ago at 44.98. You see the chart up here. Now I got 2 trend lines on the bottom and the top, of course, on the channel that we got forming to the top and the right as this market just proceeds higher. Now these channel lines I can see, I originally drew them on this chart, and I've drawn them a few times, but these were drawn because you can see when they end at the time, and I think I drew them to current at that time when I drew them. So I'm talking about June 9th, June 8th, that or thereabouts. I think we went short in my newsletter on one of these, basically looking for just a pullback to the lower boundary line. We got a fortunate trade for a couple days. Now what's interesting here, what I'm going to tie in, all right, so these were drawn here, okay, pretty clearly defined channel line, the bottom a little bit maybe away from where you might line things up. You could push it a little bit higher theoretically, right? You could take this, and maybe that's where you have a little linear regression in terms of where the lows. Maybe you're lining up there where you line up with the bottoms of the candles versus the tails a little bit. But point being, you can decide where you want. When we get this low on June 18th, I drop it here. That's where we place the line. Now, what's interesting here is you can extend them to the right, and you extend these things to the right. Pretty cool how these things match up, right? So we get the quick bounce on July 19th and 20th. That's pretty much the same area that we got that bounce last week when we were seeing lows in the market in the S&P of 43.47. We're about 130 points above that each time we've made new all-time highs. Now, what's really cool is I'm going to back this out. This is a daily. I'm going to zoom it in to the pre-COVID levels of February of 2020. We dive down to the lows of March, of course, and then we rebound from there. Now, what you can do is you can also extend these to the left. I said, you know what? I just want to see where we're dealing with. It's pretty close of where these line up, right? Interesting that you take the run that we had, and that is the run from beginning of November, okay? In terms of this market just taking off when we started to get vaccine efficacy, the vaccines are going to begin to get pushed out, hopefully getting over the hump here of the pandemic and the lockdowns. You back it up. Now, yeah, we had 2 outliers. The market getting a little bit ahead of itself in June, a little bit ahead of itself potentially in September before you get a pretty marginal pullback in the span of where this has been, right? Because you take a look at this chart, and we are in a channel line that we've essentially been in for the last 15 months in the S&P, which has taken it from a price of what's the exact low? 21.74 to 44.76. So keep your eye on that. If you're in the S&P at all, I'd keep your eye on it no matter what, extending that one to the right. And again, real clarity from where we were in November taking off to the upside. Look for those pullbacks and make sure that you're aware of them and keep your eye on that channel line because we have not broken it in 15 months. And you break below that, I would definitely have my spikes up as a pullback. I mean, the possible pullbacks in a healthy economy, when you trade, a healthy market, I should say, when you trade from 2174 up to 4,500, there's been very little heat to the downside during this entire run. You're now talking about that the S&Ps are over 1,000 points where we were trading at coming into COVID. Yes, some of the biggest companies out there have benefited the most, which have driven these indices higher, right? Taking a look at the likes of Apple, of course, from pre-pandemic levels of 80 to 150, from Microsoft shares, pre-pandemic levels of under 200. We were talking about February of 20 at 185, give or take. We're trading at 300 in Microsoft. Google, watch out. You're talking about from 1,500 to 2,800, right? All the biggest companies have dramatically almost doubled their market capitalization. You're dealing with potentially trillions of dollars. Pretty interesting. Keep your eye on that S&P channel line, though. Really interesting how we just keep staying in it. And it's quite a steady incline. I mean, the degree that this tilts to the up, I mean, you're talking about almost 45 degrees straight into the upward right-hand side that this channel line is just defined on many levels, especially on the lower boundary. Anytime we're pulling back, the market finding a bid over there. All right, jumping around to what else we got going on. So we got some inflationary data out this morning. You have core PCE, rising 0.3%, 3.6% from a year ago. That ties the biggest jump since the early 1990s, including volatile food and energy. The index rose 4.2% year over year, up from 4% in June. Personal income also surged for the month, jumping 1.1%. That's ahead of the 0.3% the market was looking for. Consumer spending increased 0.3%, in line with expectations. On a monthly basis, the inflation reading more subdued, core inflation rising 0.3%, while the headline number was up 0.4%. Not that bad if you think there's still some transitory influences going on in those numbers, because the Fed's very comfortable with 2%, right? 2% on a monthly basis is about 0.2%, a little bit under it. 0.2% would bring you to 2.4% on the year if you're not compounding every month, which would rise a little bit. Point being, 2.4%, as long as the Fed thinks it's a little bit transitory, we're at 0.3% right now. You get to 0.2%, you're basically at 2.4%, which is probably in line as long as they think there's marginal tendencies for transitive nature in those prices to bring it down a bit. So we're pretty close in that market. All right, jumping around to what else we got going on. Yeah, so Raphael Bostic, he was out there this morning. I saw some of his take on Bloomberg getting ready for my program. Now, he has been a little bit of a hawk, to say it, but he was out there yet again, and he is a voting member saying the Fed is very close to conditions to taper bond buying. Now, I wouldn't exactly agree with how rosy he was in terms of saying that the market would be fine. It wouldn't even feel the impact of a reduction in the $120 billion of bond purchases, mortgage-backed securities. He was calling it basically a security blanket. There's arguments to be made of that. To surmise it to say that the market wouldn't feel it at all, I thought was a little bit much. But guess what? The market pretty much aware of what he was going to say, as you felt no real action in the S&Ps. We're trading at 44.76. I mean, look at this trading range. Outside that outlier at 3 a.m., you've been chopping around about 5 points all night from 9 o'clock in the S&Ps, trading up 10 points right now. All right, what else we got going on? Jumping down some of the stocks. We got a lot of companies out with their earnings. Retailers, we're going to start with Big Lots, not exactly delivering for what investors wanted to see. There's your action on Big Lots. They're down more than 10% on their numbers. They lost $1.09 a share, 3 cents shy of what the market was looking for. No, excuse me. They earned, $1.09 a share. Comp store sales, though, how about sliding? 13.2%, not the kind of comp store sales you want to see. Bigger than the market was looking for even. They are trading lower in the pre-market. We got HIB out with theirs, HIB Sports. Mixed volatility, opening basically flat. These sports retailers, right? Dick's has been on a tear. Hibbett's has been on a tear. Some of the best buys out there, from $7 up to $99 this morning for them on their numbers. Peloton, we talked about, they're trading lower, but man, they're getting back all of almost that losses. Gap out with their numbers trading higher. GPS giving back a little bit of the gains in the last few minutes. Not sure what's happening there as it drops about 50 cents, but Gap Old Navy and Athleta brands. Not familiar with Athleta. I see those Old Navy commercials endlessly, though. Earnings of 70 cents. Market was looking for 46. Revenue above forecast, and they raised the full-year guidance. It seems like, as we talked about yesterday, there are winners and losers. I mean, how's a company like Gap, through Old Navy and Athleta, how are they succeeding so well at a time when you have Nordstrom's, JWN, talking about yesterday that they're still below 2009 levels? It's just a dramatic difference in terms of some winners and losers and how they've been able to meander quite the last year and a half we've had. Hewlett-Packard out with their numbers. HPQ, and Dell is out with their numbers as well. Lower numbers for Hewlett-Packard. I believe we got lower numbers as well for Dell coming at you on the open. Yeah, both of those stocks marginally down. Hewlett beat on estimates for a buck a share. Revenue misses as well. Worldwide chip shortage, folks. There you go. Yeah, and Dell, similar deal. Dealing with supply chain issues successfully, as they say, but not as quite as well as the market wanted. All right, folks, stay tuned. We're coming back from the market open. I'll be right back in 3 minutes.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&P up 8 points. All the markets pretty much right where we picked up in the pre-market. Dow up 63 points. You get the Russell positive by 4 as well. Crude holding on to the gains, up $1.30 right now. Gold contract at $17.91. Gold with some volatility this morning, up and down, up to almost $18.88. Gold trading a little bit lower on the market open, $17.91. Jumping around to what else we got going on. Some of the companies with earnings. You had Workday out with their numbers, strong numbers for Workday. You're up 8%. See those commercials all the time, watching Bloomberg in the evenings or early in the mornings. Workday, in terms of their numbers, $1.23 a share for the latest quarter. Better than expected revenue. Subscription revenue jumped more than 23% from a year earlier. It's quite a jump when you're talking about subscription revenue, which is pretty reliable source of revenue in the forward going, and they're trading a little bit higher this morning. And VMware, that's the other one I want to take a look at. VMW trading a little bit lower. VMware, $1.75 versus $1.64. Another software company, revenue slightly above forecast. However, business revenue in the cloud falls short of analyst forecasts. You don't want to see that, folks. The cloud. You got to be growing the cloud if you're going to be in that business in any way. All right, jumping around to what else we got going on. A couple stories. Tesla I wanted to talk about. They are looking to become an electric company in Texas. They filed to become an electricity provider in Texas with the Texas Public Utility Commission to sell electricity in the state. This, of course, follows the woes Tesla had over the winter. Now, they just started a big battery build-out in Angleton, Texas, which is near Houston. They aim to connect a 100-megawatt energy storage system to the grid. And as they talk about in this article, a cold snap seized Texas in February of this year, stranding millions. Now, I'm sure we all heard about it at the time, but Tesla's grid is isolated from the rest of the country. So at a time when they were basically having trouble with power, they could not go to other states and not available to relieve some of those stuck in the cold. Instead, they basically had millions of people just stuck in the cold out there. You even had Elon, somewhat, as they mentioned in this, trolling that company because they just weren't getting it done to take care of their citizens, folks, in a big way. Just reading the rest of it. But that's interesting, and that's one of the reasons why you have Tesla trading at multiples that defy any car company, because you don't see Toyota or Chevy, or General Motors, I should say, filing to become an electrical provider in the state of Texas, do you? Tesla up about 0.6% on that news. Jumping around to what else we got going on. Southwest, they've been continuing to have some problems here in terms of the operational deal of just servicing the flights they have. They're going to reduce an average of 27 flights a day from September through October, a whole month. That's going to be 162 flights a day that they're going to cut. 27 flights a day in September, and then they're going to cut 162 flights a day from October to November. They're going to run fewer flights through the end of the year in a bid to fix issues that disrupted operations and this summer and led to flight delays and cancellations. LUV is their symbol, actually catching a little bit of a bid. They've had quite a little pullback, though, the airlines and the travel stocks in all. I'm just pulling up 3-year weekly to see the full run. You come into COVID at 56. You get above it at 64. At that time, you know, domestically, yeah, travel is going to be back a lot quicker than internationally, but it didn't quite make sense that you make up that entire year and you're trading at higher prices than you were coming into COVID. These airlines had it made, folks, coming into COVID. They really did. Trying to find even further. Yeah, this is an example. From 2012, you had Southwest. November, we're up a bit today, up 1% with the market for Delta. Boeing, I've talked about as well. Boeing, you take a look at the weekly, you take a look at the trend line, could be bumping up against the bottom line of that trend line. Talked about the importance of trend lines in the S&P. Taking a look at that trend line in Boeing, wouldn't be a bad trade there. We've tried to execute this, got snipped with a short loss on one occasion, at least in my newsletter, but might be a nice area. I mean, we were just trading at Boeing at 278 as recently as March. You're trading at 218. You are back to basically prices that we were trading at in June June of last year, which is remarkable to think about how far we've come in the last 14 months. And you got Boeing at the same exact price that we were trading at 14 months ago. So much for a quick rebound like the rest of the market. All right, let's jump around to some of the FANG stocks. We got all the markets in the green. We got the NASDAQ 100 up about 42 points. Amazon shares up barely this morning. You got Microsoft shares down marginally after accelerating higher at the end of last week. You got Apple shares. Yeah, pretty tame action. We do have the NASDAQ positive, but you see some of the big stocks, not too much action to the upside. Google, you're positive by 0.2. Facebook shares, there you go, positive by about 0.7 this morning. Let's check out Twitter, up about 0.2%, and Snapchat up about 0.9% so far this morning. All right, jumping around, what other stories I got out here in terms of what you're looking at? China reportedly weighs ban on U.S. IPOs from domestic tech companies with sensitive data. My interpretation of this, folks, I say it all the time. Now, here, taking a look at the Chinese stocks, right? There's your gap down in Alibaba. All right, if you were trying to catch that falling knife up to 174, you can see why traders do it, folks. You got a $22 pop in $152 equity from Monday to just Tuesday's high. All right, what is that? That's about a 15% acceleration in 24 hours on these equities. By the end of the trading day today, if you just hadn't sold at that high, though, you might give it all back. We're trading at 159 as not surprising, folks. And what I would say is that this is not just going to be on domestic tech companies. Every company is doing business and has technology. China's not going to want that to be released to the world in any way. Regulators specifically targeting tech firms with user-related data. Nowadays, any successful company is going to have user data using some form of electronics, right? And I'm surmising, I'm sure there are companies out there where maybe you're just buying a physical product. I don't know. I mean, a company that you can survive and thrive on an IPO basis that is not somehow controlling some level of user-related data. And companies that are less data-heavy, such as pharmaceuticals, could be insulated from the IPO ban, citing people familiar. It just keeps coming, folks, in a big way. So the news, not really in any way good on there. All right, this one was interesting. For those of you that lived through the 80s and the 90s, maybe you recall ITT Technical Institute advertisements. Man, I was born in 1980, so in the 90s, I was from about 10 till 20 years old. I think that's when these ran almost religiously on television. And the U.S. Department of Education announcing Thursday they're going to forgive more than $1 billion in student debt for 115,000 borrowers, going to those who attended ITT Technical Institute, a for-profit school that is now defunct. No surprise, they got all that money for ads when they get to basically hit up the U.S. government to subsidize students to attend their for-profit college institute. And what happens when they graduate, though? They don't have the services that they needed. Obviously, we were talking about this with friends this morning. It's unfortunate because these trades can deliver substantial income. Technical trades, folks, whether you're talking about whatever you're talking about, whether it's just electricians, fixing appliances, plumbers, you earn hundreds of thousands of dollars a year. I mean, we all know you want to pay a plumber, you want to pay an electrician, you want to pay an AC technician to come fix anything, it's like $300 a pop plus parts plus time maybe. Good they'll be getting that money back. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the markets open. We get the S&Ps up about 11 points, trading at 44.77. We got Chairman Powell. He's going to be talking in 18 minutes at Jackson Hole. Now, I think he's going to get introduced at 10 o'clock by Esther George, and then he'll start speaking shortly after that. We have a whole lineup over there in terms of Fed speak that you may be getting later throughout the day with headlines. Nonetheless, we got the S&Ps in positive territory. We're bumping up right near all-time highs within about 20 points of that price level. The high on the open, we make it up to about 44.81. We're right now trading at 44.77. Taking a look at an article that caught my eye over in Bloomberg this morning. Interesting statistics here in terms of efficiency and productivity working from home. The headline is, hybrid work revolution is already transforming economies. Not familiar with the author here, but some of the statistics are pretty cool in terms of production. Working from home around 1 day a week will boost productivity by 4.8% as the post-COVID economy takes the shape. That's according to a recent study of more than 30,000 U.S. employees co-authored by, not familiar. Much of that one-off increase, makes sense, is projected to come from reduced commuting time, a factor not usually captured by economists. It makes sense, folks. I had a good 30 to 60-minute commute some days in Tampa. You do that on both sides of the day. You're talking about 2 hours a day. You do that 5 days a week. That is 10 hours. You're talking about of sitting in my car. Is that worthless time? No. Am I being as productive as possible? No, definitely not. I think it makes sense to have hybrid work revolution. You're going to see it across the board. Of course, there's going to be industries where, number one, you can seamlessly be all remote. Number two, there's going to be industries you got to be there in person if you're doing something physical. Bottom line, maybe meetings in some certain businesses are just crucial. Maybe some certain managers, maybe they just live and die by it and they do it the best way they can in person. Understandable as well. But overall, you're talking about industry-wide. Now, here's where it's interesting is that you're going to talk about some countries with stagnant productivity. Be interesting to see how they handle this. Now, you have, they talk about one article in here, a study. The headline there, clues were there before COVID-19 struck. In 2013, a landmark study by Stanford University's Nicholas Bloom found that working from home boosted productivity by 13%. A University of Oxford research paper in 2019 revealed that happy staff closed more sales. Okay, just talking about quality of life increases the worker that you have there. You spend more time with your family. You're happier. You appreciate your employer more. There's a lot of potentials there in a big way. Now, it was very difficult for this transition to take place prior to COVID because the risk reward set up for a manager to make this change was monumental in terms of if you send everybody home, the risk that you get fired if it doesn't go well is like probably nearing 100% because it's such a substantial deviation from the norm. Even the biggest tech companies out there weren't doing it because they just weren't confident enough that they could have the productivity that they had in person as they controlled those employees in a controlled environment in the office. Doesn't seem to be the case. Now you look at productivity growth, okay? Now these are where some of the countries you may see really may want to try and up the ante there. And the U.S. is in blue. You got South Korea in yellow spiking up, and this is productivity as GDP per an hour worked, starting at a basis of 100 in 2015. And you see the divergent factors there. It'll be interesting to see how some of those countries try and increase the productivity by maybe adopting more of a plan like that. They have employees in here, of course, 70-minute commutes nonetheless. This is the last part I wanted to talk about it. All sectors envision more regular working from home post-pandemic, okay? So purple is before the pandemic. You got blue during the pandemic, and then the green or aqua is after the pandemic. And this is share of workers that plan to work at least one day a week from home, okay? Even in manufacturing, 1 out of 4 workers plan to try and work one day a week at home. That's one of the industries you might see many of the workers actually have to be in the actual physical store, right? Construction. How are you doing construction working from home? Well, there's a lot of planning, folks. There's a lot of architectural plans. There's a lot of planning that takes place beyond just shovels and sand and building actual construction equipment. You see a spike up to 32.6. This one is going to wane a bit. As construction, you're going to have to be there in person at some capacity to construct. Other private sectors, you're talking about 40% during the pandemic from 15 prior. You're going to settle at 36.2. That is, again, workers that plan to work at least one day from home. And then when you talk about knowledge-intensive services, folks, when you can use your brain, that's, no matter what you do in life, and I just talked about, there's so many trades that you can just make a dynamic, awesome living with a great wage out there for. The ability, when we're talking about knowledge-intensive services, though, to operate and maximize your earning potential online. When you're just working in a computer, I mean, you talk about what? Zuckerberg, right? The metaverse. You're going to have 3D meeting spaces. It's going to be a virtual world. I mean, that's where we're coming. We're going to be able to do everything we can, folks. Not everything, because human interaction, there's nothing like it. So don't ever get stuck at home. Get outside. Don't be hermit crabs in a big way. But the ability to conduct business is changing, and pretty cool when you look at some of those trends of where workers expect to be. This is the one that really surprised me. Manufacturing and construction. You're talking about almost 1 out of 4 workers in manufacturing and construction is going to work at least a day a week from home. But quality of life, performance, the whole deal, it all comes into that in a big way. All right. What else we got going on? We got the markets climbing a bit. We're almost up to where we were pre-market at 44.84. We got crude climbing as well, up to about $69. The gold contract hanging at 17.91. And we got about 10 minutes till Chairman Powell starts speaking. We got the 10-year trading a little bit lower. Ahead of that, as we jump over, we get the yield right now climbing to 1.356%. Now, you put this thing on a daily, it's quite a drop that we just got, right? You had a little bit of a paired action in terms of we were as high as on August 4th, 135.06. We've dropped more than 2 points in that 10-year that time. We got continued volatility, and we might be back down in this little lower trading range. You can see we chopped around in the 10-year from about February, below this price level, until about July 13th, a month and a half ago before we traded higher. We take a look at the VIX. As this market continues higher as well, volatility index on a little bit of Fed action today, 1760. All things considered, slightly elevated. Not too surprising, though, when you think about the volatility we may have, but still kind of interesting to be sitting at almost an 18 VIX when folks talk about a well-defined channel, even on a weekly basis. This market just proceeds higher nonstop across the board. Okay. Jumping around, let's take a look at some of the other stocks I like to take a look at. We'll take a look at some of the cannabis stocks. Canopy, talk about a pullback. My goodness. Now, anytime you got a falling knife, folks, you get into these equities, maybe set a stop because there's nothing saying if this thing goes from 45 bucks down to 17 that you can't see it back to the lows of 9. But the lower trading range you're talking about, maybe 14.50 down here. And that's just talking about an area that you found support back in the end of 2019. You jumped through that area during the lows of COVID. You hung out kind of at that area, the lows, between about April and October before this thing really accelerated. You, of course, had Biden winning. You had Democrats controlling. The thought was marijuana legalization would come at a quicker pace. You got vaccine efficacy, throwing some fuel onto that. You traded up to $55. You got some Reddit action involved in some of the cannabis stocks as well. Just like that, we're down to $17.22. But on a daily basis, maybe that's forming a bottom there. We'll see. Stay tuned, folks. We'll take a look at some of those cannabis stocks when we get right back. Cannabis stocks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of Canopy growth up here. We go from 1383 just about a year ago. Remarkable. You're talking about September 3rd. What's the date on there? No, excuse me, October 2nd, up to 5650. We're down to 1723. You take a look at these volume spikes in this chart, right? I mean, just recently, to zoom it in, you're talking about doing 2.4 million, 1.9 million. Is that Monday? Yes, it is. 1.9 million one day, 2.6 on Tuesday. Wednesday, we only did 1.7 million shares down here, 2.5 on Thursday. Yesterday, this morning, we've done about 280,000 shares. Backing things up, some of these volumes, even the last earnings, we're pushing 7.2 million, 5 million the day prior, 2.3 coming into that. Back it up to the quarter before that, we're talking about June earnings. You're talking about 10 million shares, et cetera. 13.4 million shares traded 5.9. We're coming down on some pretty light volume here, even if you're backing into this area. I mean, look at this acceleration we had. Now, that was quite a run, because that's not quite comparable, because that's vaccine efficacy. The markets were rocking. But even before that, you're talking about areas of 14 million shares traded on October 19th, 10 million shares traded October 21st, just coming into this area with absolutely no volume whatsoever. Keep your eye on some of these, as eventually that market will pick up, folks. We do have medicinal marijuana in Florida, and it's just such a racket when you think about it, folks. I looked into it. You got to pay $200 to some doctor every 9 months to get a prescription for basically any type of an ailment, whether it's anxiety, pain that you'd like, all right? And so you just basically have the ability to pay to have pot not be illegal for you. And then what happens to the people that can't pay $200 every 9 months to walk in and basically have a doctor say, you good, you good, you good, here's your script for medicinal cannabis. Thank you for your $200 fee to the doctor every 9 months to do that. Such a racket in a big way, no matter what you're talking about. It just makes no sense when it's just basically a dog and pony show. Unfortunate that poor people don't have the ability to make sure that marijuana is not illegal. Now, in the medicinal name, but it's just unfortunate that what's going on, because it's obviously hitting the poorer communities out there. That will change, though. And look for these markets to catch a bid, because we've seen some max pain across the board. Tilray, right, down at $13 from $67. Aurora Cannabis down to $7 from even 18. Stay tuned, folks. We got Fed Speak. Chairman Powell, he's coming up, but Basil Chapman's going to give you the breakdown with the Tiger Technicians Hour live next. Live programming all day, folks. Have a great Friday.